Mr. Ladies and gentlemen, good day, and I welcome you all on behalf of Edelweiss Securities on the FY20 earnings call of Adani Transmission. From the management today, we have with us Mr. Robbie Singh, Group CFO, Mr. Anil Saldana, CEO Adani Transmission, Mr. Kandar Patel, CEO Adani Electricity, Mr. Kaushal Shah, CFO Adani Transmission, Mr. Rakesh Tiwari, CFO Adani Electricity, and Mr. Jeet Adani, VP Adani Group. We would have our opening remarks from Mr. Saldana, and then we will have a question and answer session. Over to you, Mr. Saldana. Thank you.
Thank you. So welcome to all the analysts and investor friends for our Q4 FY20 as also the annual FY19-20 call. I'm sure you would have gone through the press release as also the presentation that we have uploaded. I would appreciate, in fact, if you could also go through the latest version of the presentation that was updated a couple of days before, as we have added some more highlights on various subjects. Well, friends, these are very unprecedented times, very unusual times. We are all privy to something that perhaps in our living time we had not seen or observed or experienced. Well, for most of us, this would mean following what the powers we are advising. However, it's not the same for essential services like ours. Both for transmission and distribution business, this pandemic meant that against all odds in terms of movement of people, in terms of movement of men and machinery, that we manage in such a way that we are able to ensure uninterrupted supply. And we have all heard so many statements being made for the corona warriors, which is naturally something that we all empathize and relate to, because we are absolutely indebted to all the doctors, the paramedical staff, the hygiene workers, and the entire paraphernalia which is dedicating itself to the care of people who could be suffering from COVID. However, equally daunting is the task for the power warriors, both at Adani Transmission establishments all across India, as also for Adani Electricity Mumbai, which is focused in the suburbs of Mumbai. It's been quite a challenge. But thanks to our drills on the disaster management, which typically would normally foresee that we would train our people to deal with such situations of disaster for maximum of 48 to 60 hours. But in this case, we are absolutely wonderstruck with the courage and the conviction our people have shown in being in lockdown situation in their substations for as many as 48 days plus. Right from day one, when the event unfolded, our people opted that instead of using the essential services passes and traveling cross country, we might as well lock in ourselves into substations which spread across 31 locations for Adani Transmission. And since that day, there have been, as you know, 2 extensions. But our members have opted to stay there. We were open to swapping the staff. We were open to moving different teams in lieu of the teams that existed. But hats off to power warriors that are there at these substations. They've done an amazing job for the call of duty and quarantined themselves and are making sure that all the operations and the availability factor remain at the top-notch level, which have been the case in the past too. So even during these torrid times, these people have shown exemplary courage and sincerity. But I think more daunting has been the task for our power warriors at Mumbai, where both, one, because of the situation in Mumbai, and number two, from the locations that many of our staff moves around and maintains the power supply, it's been a bigger challenge. However, needless to add, they've still maintained absolutely uninterrupted seamless supply as people operate from homes. And at this stage, presence of uninterrupted electrons is of utmost importance to every human being, including in important establishments like hospitals, nursing homes, and other care locations. So we are absolutely feeling indebted to our people in these locations who are moving around the streets, moving around the entire locations in Mumbai, including dense areas, difficult areas, to maintain the power supply and make sure that the interruptions do not cause any harm or hardship to people at large. So friends, the test of time in these crisis moments has been exemplary displayed by our people, and we therefore feel that one should not only just talk about the fact that we have displayed very high level of availability in our network for the year 1920, but that's more so displayed during these last 48, 50 days when our people have maintained similar level of availability, braving all the challenges that they have on ground zero. So that was about the context in which we are all seeing things pan out in front of us. But let me quickly move over to the key issues for which we have all got together to discuss. ATL group of companies, all our transmission SPVs, as also Adani Electricity Mumbai, have done quite well during the year 1920. Our growth paradigms continue to display growth and improvement in operational performance. We have displayed very clearly that on a console level, our EBITDA number moved 50% year-on-year basis, as also our consolidated comparable PAT grew by about 26% on year-on-year basis. But for one write-off, as you saw, which was on account of the fact that we refinanced the entire Indian rupee loan with long-term financing at competitive price, as also with very friendly terms. We had to incur that some cost, which is to write off the fee that we had paid for the previous funding. So, but for that cost, the quarter four as well as the year would have looked further improved from the current numbers that you see. Coming to the individual businesses, the EBITDA for the year for Adani Transmission reached very close numbers to 2,500 crores. which was an impressive 21% year-on-year growth. And the interesting part is we continue to maintain a very high percentage of revenue as our EBITDA number in the transmission segment of business, which was as high as 91.8%. Similarly, the PAT grew by about 34% year-on-year when it comes to the transmission side of the business. On the distribution business, if you look at the annual EBITDA, it crossed 1,800 crores. So it's well better than the previous years. So therefore, I don't have to talk about those numbers alone. The operational EBITDA margin also recorded a higher number because, as you know, the normative number is about 22%, but we registered 24% of our revenue. The company, besides doing well on the top line and bottom line numbers, has also continued its commitment towards the capital management programs, as you have known from time to time, both at the ATL SPVs, ATL level, as also at Adani Electricity Mumbai. The capital management programs have actually come to fruition before the end of March 2020. Adani Electricity Mumbai also got investor in form of Qatar Holdings, who have taken 25.1% equity from ATL to be one of the partners at ATL level, at AEML level, as also besides this, Adani Electricity Mumbai completed the entire refinancing. In addition, Adani Electricity Mumbai also stitched up the line of credit for their entire capex plan for 5 years. But the way the entire capex plan has been worked out, Adani Electricity Mumbai will be able to self-finance capex for many years thereafter. In fact, we are hoping that it will be for the life term in terms of the way the entire program has been planned. Coming to Adani Transmission, again the capital management program has been completed during the year, and as you are all aware, we shared with you before. First, we refinanced the $500 million of the Indian rupee finance that was there for funding of various programs. And then we worked on a very new product, which is the long-term USPP. The United States, this US dollar private placement that you saw, refinancing of 6 operating assets which we had commissioned in the recent times. We could refinance and also upsize our debt. We could eventually get $400 million for that, and which is again a manifestation of the kind of faith that the investors have reposed in our programs, in our growth strategy. Coming to the last string of what I mentioned in terms of growth, the company is sitting on a very decent order book. In fact, as things unfold, we almost are touching close to about 10,000 crores worth of orders in line of sight. AEML, as you know, have programs which will be upwards of 1,500 crores of capex every year. In addition to that, we have to now work on a recent approval towards the last quarter of the previous year on an HVDC link that we have to provide between a generating hub within Maharashtra to one of the substations of Adani Electricity Mumbai. It's a sizable project. It has tremendous promise of bringing in 1,000 megawatts, almost as if the generating station is getting connected on a solid line basis to network of Adani Electricity Mumbai. And this is necessitated because of the fact that the existing assets which have stood the test of time for Mumbai are now nearing almost end of their life. Maybe another 4 to 5 years, many of these assets will start to retire, and therefore arrangements have to be made to make sure that the load end connected generation is provided on a firm basis, on a robust basis to Mumbai. And that's what we will achieve through that HVDC link, which the planners, the policymakers have also accepted as a suggestion from our side. We've received the initial approvals, and we are now progressing on the next steps. So all in all, as I said, on the operational side, the company continues to do well. Our people have shown exemplary courage to even brave these difficult times and continue to maintain the same operational levels. On the growth side, the company has more promising growth in the times ahead with very solid capex outlook for the company. On the softer side of the programs and initiatives like programs for ESG, programs for our people, the company's commitment is again steadfast. We are going to be in the second year this time when we will have the integrated reporting. As you are all aware that in the transmission segment, we were the lone utility in India to have produced our integrated report last time. And this will be the second year in the running when we will have the integrated reporting. And this is not just from the point of view of what we report, but from the point of view of what is an embedded commitment to all the key aspects of environmental benignness, the social connect with the community, not just the target community, but that the larger sense of community as we work along, and of course the governance aspects that we are trying to absolutely embody and make sure that they are part and parcel of all that we pursue at Adani Transmission Group of companies. Now, QHC's participation, Qatar's Holdings participation, is also a very welcome sign, because such partners, and not just behold our value system, but they also abet and assist in terms of ensuring that we raise the bar further. And we would more than welcome their participation and make sure that we not just have them as partners, but we have many learnings, not just from them, but by virtue of their connect with the other peer community in which they hold their presence. So all in all, the ecosystem expands, and we are going to be certainly benefited by the expanded ecosystem also. So I'm going to stop here, and then by virtue of your questions, which we would welcome, we would be able to communicate several additional aspects that we may have not covered in the first part of the communication. So thank you so much.
Yeah, Aisha, can we move to the Q&A session now?
Sure, thank you. We can now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question from the line of Mohit Kumar from IDFC Securities. Please go ahead.
Yes, sir. Good afternoon, sir. Thank you for this uninterrupted power supply. We stay in Mumbai, and that allows us to work from home. And so congratulations on the successful capital raise in various forms in the quarter. Sir, I have three questions. First is on what is the kind of capital expenditure you expect for FY21 and FY22? And has anything changed due to COVID? And secondly, on the payment side, we keep hearing that the payment is only 50%, given that the discount situation remains, very, very bad, which means that our collection should be on the lower side. Can you comment on that? And thirdly, sir, what is the kind of commissioning do you expect on the TBCB side in FY21? And is there any change due to COVID, or similar number you can give for FY22? The worth of capital project which will get commission, and the incremental revenue in FY21 and FY22. Thank you, sir.
So thank you, Mohit, and thank you for reaffirming that as Mumbaikar, you are able to enjoy seamless power supply during these difficult times. So I'm sure this will certainly motivate our teams. Coming to your other questions, you asked about what's the kind of level of capital investments we will be able to do considering the present times. Well, one has to only hope that the work on ground commences soon enough. Number one. Number two would be, one would hope that the call for the workers to move back also gets a better sense, because it's very ironical that I forgot mentioning, and I will use your question to mention, that we retained all our workers at our work sites. For all these 1.5 months, we took care, created camps for them with proper social distancing, made sure that their boarding and lodging is akin to their being safe and healthy, with the objective that once the COVID situation relents itself to them working, we will immediately commence work. The current social pressure that's getting exercised on the workers by virtue of the calls being made that these people come back to their hometown and stuff like that is a matter of worry. At this stage, we haven't seen signs, but if the social pressure continues to mount on these workers, one won't be able to hold them beyond a particular point, despite having incentivized them, etc. So at this stage, all the estimates that we are conveying to our analyst friends and investors is based on what we foresee, based on the fact that we assume that the work will commence, if not immediately on 17th, when the lockdown period is likely to over, by somewhere maybe a week or two later from that. So basis that, we hope that we will have close to about 3,000 crore worth of capital investment, capex plan for ATL, group of SPVs, and close to about 1,500 crores plan by virtue of Adani Electricity Mumbai. So that's the plan right now. I would refrain from giving guidance for 22, except to give you a clue that it could be more or less of similar nature. Your other question, Mohit, was that the payment part during these times is going to be partial, and I don't think so. You are very far from your estimates in terms of the fact that the DISCOMs who have been allowed by law and by the regulations and guidelines, including by CRC and by state regulators, have opted to make close to about 60% payment to us in the transmission side, and the rest will carry 12% interest as per the regulatory guidelines. So to have the late payment surcharge, which for the period of up to 90 days has been permitted to be at the rate of 12% instead of 18%. As far as Adani Electricity Mumbai is concerned, they have done an exemplary job in terms of running their bills, whichever areas or whichever kind of customers, category of customers, they had the automated meter reading facility. They have raised the bills through the readings that they downloaded through the servers, and the rest they have done on the estimation basis. So they have been e-pushing the bills, and they have been e-collecting payments. They are, since they are on the rolling basis, I guess, and since the regulator has permitted them the late payment surcharge in Mumbai, they seem to be doing a reasonable job in terms of collection. Though, of course, it's not going to be any time at the same level, because we clearly appreciate that the consumption as well as the payment avenues are both going to be stymied. When it comes to consumption, the industry and the commercial is clearly under lockdown and inactive, and therefore the enhanced consumption will be primarily of the residential category of customers. But as far as the e-payment avenues are concerned, those who have the e-payment avenues have contributed. And the payment classically in the month of April, KP would be of what percentage? About 60%. So Mohit, that's part of your second part. Third part is, we have to only hope that the COVID will not extend its lockdown, especially from the point of view of our supply chain. While our work has started and we are continuing to erect transmission towers and lines wherever material was available to us, but needless to add, the material cannot be for long months. We will need the supply chain to open so that we can have uninterrupted supply of materials, and same would be true for Adani Electricity Mumbai. I can only tell you that we have stocks ahead for the next 60 days on a very comfortable basis, but one would hope that we will have uninterrupted supply of material even thereafter.
Okay, so there's no guidance for FY21 as far as commissioning is concerned as of now? Whatever number that I have said may not lead to capitalization on a concurrent basis with similar numbers, but you can easily assume that for Adani Electricity, it will at least be 75% of the capital spends as the capitalization. As far as Adani Transmission is concerned, that will also depend on the fact that we mostly used to complete our projects ahead of schedule, as you know that. And most of our capitalization plan during this year was also ahead of schedule. But there is a likelihood that because of force majeure that the users may take, users I mean either generating station or the DISCOMs, they would therefore want to make payments not from the date of capitalization, but from the date that they will be legitimately permitted by their regulators as the date for their usage. So we'll have to wait. Therefore, I'm not punting a number. We are waiting for some of those aspects to get cleared by the regulator. Understood, sir. Thank you, sir. I'll get back in the queue.
Thank you, Mohit.
Thank you. We will request the participants to please press star and 1 to ask a question. The next question is from the line of Dhruv Muchal from HDFC Asset Management. Please go ahead.
Yeah, thank you. Sir, if you can help me with the EBITDA for the under construction transmission projects, excluding the Vikram in the HVDC line. A number you typically share.
Can you speak a bit more loudly? Sorry, we didn't get your
Sorry. Yeah. Sir, if you can share the EBITDA number for the under construction transmission projects, excluding the HVDC and the Vikram line.
Okay. Can we provide you those details separately? Because I think we are, if my sense goes, I think we have shared on our deck the tariff numbers as we had bid out. You can take, for your sake, you can take the calculation with 90% of that tariff number as the EBITDA number. Okay. I don't have it offhand, especially because some of the projects now, because of COVID, will have 2-3 months of schedule here and there.
Yeah. So I went through a presentation earlier. You used to give it this time the revenue number, but I think this time it's not there. Probably I will get it from your team.
If you don't have it, please send a mail. Please send a mail to Vigil, and you will have the answer. Because for us, it's a very transparent. You can actually draw the P&L for next 35 years. Because in the TBCB, once the tariff number is public and known and accepted by regulator, you can take 90% as the EBITDA number. Sure, sir.
So second question was on the HVDC line. If you can give us more clarity, is it approved? And what are the, or if not, what are the further steps that are required?
Well, as I clarified in my opening remarks, HVDC project stands approved, and it's a line between a place called Kudus in Maharashtra and Mumbai, where the termination is likely to be at RA substation. The total line length, connected length, is likely to be 80 kilometers. It's going to be a state-of-art high voltage DC project. High voltage DC project will mean that the generating facilities around Kudus will be as if they are deemed connected to Mumbai directly without interruption. So the islanding facility and other aspects that we have been so familiar with Mumbai will be available with this novelty, even for Mumbaikars later. So that's the biggest advantage. The project cost is estimated to be 6,000 crore plus. The project schedule is somewhere close to about 36 months.
And so this will be a regulated model, right? I see from your presentation.
It's going to be a regulated project.
Okay. Sure, sir. And okay, so 36 months from should we assume from now, or so for my building purpose, should I start from now, or there's some steps?
You can start from 1st September. 1st September of this year.
1st September. Sure, sir. And sir, last two things. So I went through the MYT, which was recently out. So in the MYT, it seems the regulator has approved capex for Adani Bombay at around 500 odd crores. So should we assume, but of course you have bid a higher number, you have given a higher number. So should we assume that 1500 crores, or it could be lower?
No, so let me explain. See, what the regulator does, regulator for the first few years, first 2-3 years, till such time that they have the line of sight on various schemes that we have presented to them, puts the number, and they have written that clearly, if you read that MYT order, that they have taken the figures in line with the schemes that have been approved by them till now. Because as you know, we don't spend even a single nickel and dime until we have a prior approval for capex from the regulator. For the last 2 years, when they don't have these schemes, naturally because the distribution schemes don't extend beyond that time, they have taken the average of the previous 3 years as the figure, which obviously, as you know, in the previous 3 years, the incumbent did not do the capital investment, and that's visible by the number that you will see. Now, what happens as we present schemes to the regulator keeps approving those schemes and keeps approving the execution of those. Once we capitalize, and through the MTR, which is the midterm review, which we are entitled to go to halfway, the regulator then trues up all of that capex. It's a beautiful system. Nothing gets lost, and everything comes back along with the carrying cost. And we should also be aware of the fact that in case of distribution, the advantage is that you get the quarterly depreciation advantage. So whichever quarter you capitalize the distribution capex, you get the advantage from that quarter itself. So that's the beautiful part of the entire scheme.
Sure, sir. That helps. And so, lastly, on the after the refinancing that we have done now, what would be the debt repayment for the next 2 years, FY21 and 22?
1 second. A number.
Yeah. So hi, Kaushal here.
Yes, sir.
As far as AEML is concerned, we do not have any repayment schedule because it's a 10-year bullet. We will be doing it. As far as USPP and so for ATL, there were 2 bonds. The first one is 2026 maturity. So there also we don't have any repayment. The only repayment which is due is for the ATL second bond, which we did it in November, and then the USPP. Both become due somewhere in the month of September and the next in the month of February, which will be in the range of around $12 million each. Yeah. So we are extremely in terms of the liquidity risk. We are fully covered, and we do not have any short-term maturity profile. As you are aware that even the CP which we had earlier and the NCD which of 3 and 5 years, all of that we have refinanced to this the bond. So the short-term maturity is less than 2% in the overall portfolio. So we are very well covered with the liquidity risk.
Sure, sir. So FY21 overall on a consolidated basis, your repayment is about 24 million. About 200 or 150.
Both put together, interest and principal will be 400 crores, so around 4 billion rupees.
Okay, sir. And so similar number for FY21? 22, sorry, 22.
Yeah. And then if you need exact number, you can send a mail,
No, broadly, because of the refinancing, we get a lot of upfronting of capital, right? So that is
Correct.
Sure, sir. That's all, sir. Thanks a lot.
Thank you.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1 now. The next question is from the line of Lenny Lee from GPJ Asset Management. Please go ahead.
Hi, thank you, management. So I just have two or three questions, so maybe I go one by one. My first question would be, I just saw your distribution business. The units sold are pretty much the same as last year, so but the EBITDA dropped by 22%. So just wondering if it's because any of the customer mix changes during the period.
Excuse me, can you just come closer to the microphone? We couldn't hear your voice at all.
Okay, sure. Sorry for that. So can you hear me better now?
No, I don't think so. There is anything that we can hear much.
Hi. Is it better now?
Okay, we will come. We'll get our ears close to the speaker. Yeah, go ahead.
Hi. So sorry. Can you hear me now?
Yes, go ahead.
Yeah, sure. Just wondering for your distribution business, the units sold seems pretty much flat to last year, but the EBITDA dropped by 22%. So just wondering what's the reason behind?
EBITDA dropped by 20%? No.
22. I mean the distribution business.
No way. In fact, the EBITDA didn't drop at all. The EBITDA margins were 22% earlier. Now it's 24%. In fact, just to explain you, the distribution business, the top line consists of the bulk power cost because that gets reimbursed. So therefore, never go with any idea to be formed based on top line. Because if I reduce our bulk power cost, the top line will look smaller. But that does not mean that either my EBITDA or my returns will get adversely impacted. Distribution business, our bottom line is protected because it's on the concept of return on equity principle. It's got, therefore, no correlation to the top line. The EBITDA number will always reflect the build-up to the ROE. So I think if you wish, we can have a separate call, number by number. We could clearly take you through the construct of how the EBITDA number will always remain steadfast in distribution business.
Yeah, I know the overall concept, but just in your press release, I just saw the Q4 result, the operational EBITDA dropped by 22. So I'm not sure if it's something I should refer to, or so you mean that the EBITDA should be kind of stable, right?
Oh, absolutely. In fact, just hold on. I will once again check this part.
Okay, sure. So my next.
In fact, the figures are in front of me, and as I see it, the EBITDA number of Q4 for AEML is 474 crores, which is 4.74 billion rupees, and the previous year was 4 billion rupees. So it's increased. So please, we will be more than happy to provide you any figures that you want. At the same time, we'll be happy to take you through these details. But be rest assured that the very construct of distribution business is such where you will not have any adverse impact on EBITDA, and don't ever go by the top line.
Yeah, sure, understood. So it's not affected by the volume, so right?
That's correct. And also the bulk power cost.
Okay, sure, understood. So I also hear that you mentioned in the payment that you received to transmission business are around 60%. Am I right on that?
Yes. So yes, you are right. Because of this COVID time, we have got the collections which are temporarily lower, and that's because the permission was granted by regulators to the distribution companies to make delayed payments, for which they will have to pay a carrying cost of 12% per annum basis for every amount that they delay, and I think they are availing of that facility. It doesn't worry us much because we have enough cash today for us, and along with the carrying cost, we should reasonably be in good situation.
Yeah, sure, thank you. So I also remember you mentioned that there's going to be 20% of interest payment on that. So that looks a lot for me. Just wondering if I get it right.
Yeah, 12% of interest. 1, 2.
12%. Okay, sure, understood. So how about the distribution business from your retail side? How much collection have you received? Or have you received this period?
Same. We said 60% in both the cases.
Okay, 60 for distribution and retail.
Right.
Okay, sure. Thank you. I have no more questions. Thank you.
Thank you.
Thank you. The next question is from the line of Mohit Kumar from IDFC Securities. Please go ahead.
Yes, sir. Sir, on the EBITDA side, you just mentioned on the distribution that the EBITDA for Q4 is 476, but number which I have in the slide number 39, it says 275. I understand that this quarter there has been a lot of refinancing, and so this is the reason distribution and transmission, both the cases, the Q4 numbers are slightly, far from the mark. Can you please explain, is there any exceptional in this, in this distribution? What is the exceptional amount in distribution and transmission in this quarter?
One second, just hold on.
Yeah.
Our members are checking, will separately call you and tell you this detail.
Sure. I'll get. So second one is on gross debt. The slide number 22. The cash and bank balances is mentioned as 46 billion. It also includes loans and assets, I believe. Why the loans and assets have increased in the YOY? It has become 24 billion compared to barely anything at the end of FY19.
So Mohit, Kaushal here. So it's very, very important to know that under what circumstances we have deployed that and it's been classified under loans and advances. See, what has happened was that we had a surplus both at the ATL and AEML level. Now, you know that the situation of the mutual fund market in the month of the March was very, very volatile. And we have been advised by most of our bankers who have assisted us in the fundraising and all of that, putting the money into the mutual fund will be creating a lot of issues because all of them, first of all, are giving the negative returns. And the second, the guidance of them has become true by whatever has happened with the Franklin Templeton. So we have gone with the group policy of, treasury policy, whereby the group has guided us for the temporary parking of this fund at the higher interest rate for a very short-term period of a month or so. And I'm happy to inform you that we have received back all the money and we have a deposit lying with the banks, which is earning 8% FD interest as of now. And this is a AA+ rated bank, and we have been able to negotiate that. So in all respects, we wanted to preserve the cash, and we have gone with the group treasury policy. And as a result, it is classified as a short-term market investment. For us, it is a cash which is available at any time when we needed it. So that's the answer for that. I hope that this
Understood. One more accounting question, sir. The QIA invested 1,200 crore, right? But minority interest which you are carrying at the end of FY20 is 10.6 billion. Is there something which I am missing?
Sorry. QIA invested 1,200 crores and
but the non-controlling interest in the FY20 balance sheet is 10.6 billion.
So there is a minority interest you are talking about because
Yes.
About 25%. So that number
Right.
we have worked out as per from the 31st December and 31st March proportionate numbers which we have worked out.
Okay, sir. I'll take it separately, sir. Okay. Thank you, sir. Thank you. That's it from my side.
Thank you.
Thank you. The next question is from the line of Swarnim Maheshwari. Please go ahead.
Hi, sir. So, couple of questions. To start with on distribution. So, firstly, if you see, there are some opportunities available in the distribution business. So, are we looking to expand our wings in different cities?
Well, all the opportunities that will come into distribution, we'll certainly look at them favorably, be it in the franchisee or in the PPP basis. So at this stage, the only opportunity that we are familiar with, which is ongoing, is the Orissa opportunity. So we certainly are participating in that. We at this stage, that's what is on the anvil.
Okay, so there was a media report today morning that your BACS, Rajdhani and Yamuna, they were also on block.
Well, we have no information because we read that news as much as you read that news. We are not part of that process.
Okay, but if on block, you will be kind of looking for that as well.
I can't comment anything at this stage because there are several factors that one has to look at from the perspective of the payments which are due to the generating companies, which is a very formidable number, and several other factors. So we will have to evaluate that part before we make any comment, because it's not an easy venture.
Got it, sir. Right. So secondly, what would be the regulated equity at AEML at the end of FY20?
Regulated equity at the end of. I got an indication from our friends that they will separately let you know.
No worries, sir. No worries.
No, you are asking for regulated equity of AEML or ATL combined?
No, sir. For AEML, first for AEML and then for ATL if you can provide, but more from AEML perspective.
AEML will be 3,400 plus whatever has got capitalized this year. So I think let me double guess, it will be 100 plus. So close to about 3,800.
3,800 crores.
Yeah.
Okay. And sir, of the overall collections in Mumbai, what would be the percentage from the online collection actually?
The online collection, we had reached close to about 52% prior to lockdown, but now it has reached 60%. Yeah, now it is 60%, means 100% of what we have collected is online only.
Interesting. Great. And sir, on the transmission, if you can just provide us with the active bidding pipeline before the lockdown. What is the active bidding pipeline?
The active bidding pipeline is very strong. In fact, the numbers that have already been advertised pursuant to qualification is close to about 20,000 crore plus, and another about close to about 20,000 crore, which is at the stage prior to RSQ. It's a very strong pipeline.
Okay. And lastly, sir, so if you can just elaborate more on this 500 bps improvement in the distribution margins in FY20. So what led to that, and also the fact that are there more levers over here that we can look forward to?
The very construct of distribution business is very simple. There are two or three factors which change the margin. Number one, if you go below the loss level, AT&C loss level that the regulator has given you, so that becomes a clear advantage because you are able to retain a larger percentage of that. So that's one factor very clearly. The second is in terms of normative factors. So for example, the O&M cost is normative. Several of the other aspects which are admitted by regulator in terms of interest costs, etc., become normative once the announcement is made by virtue of MTR. And if you do any subsequent savings in those accounts, that becomes an added advantage. And third, of course, is the normal prescribed incentive, which, of course, if you are entitled, if you achieve those aspects. Last but not the least, that if you try and capitalize projects faster than what you had envisaged earlier, you get the advantage in terms of the capitalization happening earlier, and therefore the ROE kickstarts early and the depreciation starts to come to your advantage early. So I think these are the simple factors that contribute. There is nothing else, because everything else is a pass-through.
So we would like to assume that at least 24-25% margins are kind of sustainable, and there could be some improvement from this numbers also. Okay.
I have been provided some of the figures while you were speaking. Since you had asked how much is the online, it's 65% to be precise. How much is the regulated equity? It is 3,700 crores. How much is the regulated debt? It is 2,600 crores. And of course, I think that's what it is. Yeah.
Got it, sir. Very helpful, sir. Very helpful. Right. Aisha, are there any more questions?
No, we don't have anyone in the queue.
Got it, sir. Sir, many thanks for such a vivid description. Would you have any closing comments over here?
Well, nothing else except to tell and convey that people should remain safe and healthy, and wishing that the life comes to normal in sooner times than later, so that one sees activity on ground and one sees that things start to fall in place. So that's what one will hope, and stay safe. Thank you.
Right, sir. Thank you so much, and wish you all the best.
Thank you.